.com.au. Let's get straight into it. Julia, we started the week, I should say, on a positive note.
We did start the week on a good note, but once we saw the peak early on in the session, we actually saw the gains evaporating quite quickly. In the end, still up by about 0.5%, and it was the blue chips which were outperforming, with the small cap index actually down by 0.2%. It was also a record day for some of the stocks on the Aussie market. The most notable was Commonwealth Bank, which reached an all-time record high, as did Magellan Financial Group. We also saw Invocare and Navitas also seeing all-time record highs on the market. Most of the session, we saw all the sectors trading higher. In the end, though, we did see a flat result coming through for both the staples and the healthcare space. I think one of the things which saw the Australian market back away from the very strong gains we saw initially is the fact that we saw the Australian dollar strengthen, or more the US dollar weakening, and that had an impact in terms of asset classes around the region. If we have a look at the Australian market, this is the intraday graph of the Aussie share market, but I think if we have a look at the 30-day graph, it tells us a picture it tells us a story as well. And if we have a look at the 30-day chart, this is what it looks like, and you'll notice that 3 times now we've bounced off the same level for the Aussie share market. So it does look like on the upper end of things, the Aussie market really being bounded in by that resistance level just above 5,240 points, and we saw the same thing once again. So this is the 3rd time we've tried that level.
Metrics, the key trends or aspects that you're looking for when gauging the outlook for our market?
I guess the big thing is the Aussie dollar, and that's a key thing in focus at the moment. And for Australians who are looking at investing, I guess one of the things to consider is investing offshore, because as an Australian investing offshore, what you want to see is a currency falling. So when you convert your investments back into Aussie dollars, you actually get a boost from the currency, as well as hopefully a boost from your investments investment performance offshore. So I guess that's one of the things to consider. And there's a huge impact in terms of the Aussie dollar on earnings here in Australia. One of the things that I've been watching is the iron ore price, and it's important to watch the iron ore price around this time because we are heading into a seasonally weak period. Usually the 3rd quarter of the year is where we do see iron ore prices faltering. And we have seen prices falling off quite sharply. In fact, down 2.3% from last week, trading at 123.28 at the moment US a tonne. So heading into a seasonally weak period, and yet the iron ore players have held up fairly well. And I think that's the Aussie dollar impact that we're seeing. We've seen the weaker commodity price being offset by the fall and the tumble that we've seen in the Aussie dollar. In fact, if we have a look at a 5-cent move in terms of the Aussie dollar downwards, it boosts earnings for stocks like Atlas as well as Mount Gibson Iron by around about 40%. So this is quite a big boost to the earnings number that we see from just the currency fluctuation, and even things like Fortescue, we see a boost of around about 11%. So that currency plays into a lot of different factors. One, for individual investors' decisions to invest. And if we do see continued weakness in the Aussie dollar, then overseas investments are something to have a think about. And then, of course, in terms of earnings for Australian companies which are listed on the ASX.
Are you, I suppose to some extent, Julia, and look at gold. Once again, the gold stocks very much under pressure. The gold price very much under pressure. Is that what's at play here? They're just copping it from both sides, increasing costs and a falling price.
I think so, and the gold miners have been hit hard. In fact, last week we only saw 3 out of the 40 gold stocks which make up the gold sector managing a rise, and today the one weak place in the market was definitely the gold space. In Asia, we saw gold prices taking another tumble, so dropping 1% at just over 1,346 US an ounce. It does look like gold's looking quite vulnerable in terms of technicals as well, so I wouldn't be surprised to see it testing that 1,320 US level. And if we have a look at gold at the moment, the worries around inflation is dissipating, the worries about, I guess, Armageddon are disappearing as well. So gold prices do continue to come under pressure. And of course the market also watching those big players. George Soros coming out with his quarterly filing, and it looks like once again decreasing his holding in the Spider Gold ETP product, the exchange traded product over in the US. So that was negative as well. So unfortunately the gold miners not having a good day today. In fact, some pretty big moves on the market. Evolution Mining was down by 10% and Perseus was down by 8%. So just continuing that tumble that we've really seen occurring in those gold miners over the last 18 months.